Hello, you're watching the first Commodities Corner of the trading week. I'm Thomas Taplin, and today we're focusing on the huge supply and demand debate in Asia, specifically China. Since 2000, oil demand in Asia has increased by 41.5%. This is a notable increase when you consider Europe and the Americas have fallen by 2.3% to 12.4%. The question is, will there ever be enough oil to satisfy the growing appetite in Asia? Well, joining me on the line is Fadel Gheit, Managing Director and Oil and Gas Senior Analyst at Oppenheimer in New York. Mr. Gheit, thanks for joining me today. First off, are you concerned at all by the current supply of oil to Asia?
Not really. We managed somehow to match or to balance supply and demand. We've been doing that for decades, and I don't think this is something that we should worry about too much. Because if you look at the global inventories, they are at or close to record levels. Yes, oil demand will continue to grow, but the demand growth rate is likely to be much slower than we had expected, say, 4 or 5 years ago, because higher oil prices brought about conservation, alternative energy, going to other fields, and also created, in my view, the shale revolution in the U.S., which is going to have significant impact not only in energy supply and demand in the U.S., but also globally.
But demand has increased massively, and, for example, it's almost as if no supply in the world could satisfy China's growing thirst right now. Some analysts have said OPEC will not adjust its oil output in tomorrow's meeting. Should it?
I don't think that OPEC is going to do anything different. They will just keep the status quo. They are happy with the current high oil prices. In our view, oil prices are inflated and will remain inflated because of the uncertainty surrounding supply from the Middle East, mainly Libya, which has been basically down by almost 1 million barrels per day, and the situation in Iraq and Syria and elsewhere. It brings more anxiety to the oil trading pits, and that's what creates the volatility in oil prices.
Prices have been rising ahead of the OPEC meeting tomorrow, as well as positive manufacturing results from other major economies. What's your assessment for the price of oil going forward? And will the OPEC decision on whether to change its output level of around 30 million barrels of oil a day have a noticeable effect on the markets?
Not really. OPEC, basically, Saudi Arabia is the de facto leader in OPEC. They are the largest producer. They are the swing producer. They can increase oil production by 1 million barrels a day, which they have done to basically offset the impact from the Libyan situation, which pulled off about a 1 million barrels a day from global supply. I think that will continue. I don't see any challenges. The only problem is facing OPEC right now is what to do with Iraq and Iran. Iraq has been exempted from quota for the last 7 or 8 years because they have been in the penalty box for the previous 20 years. So they were exempt from the quota, and now Iraq is producing more than 3 million barrels a day and will continue to grow oil production. And so somebody else in OPEC will have to slow down in order for the Iraqi oil to come to the supply, the global supply, without disrupting the balance and sending crude oil prices lower.
Finally, Mr. Gheit, US crude stockpiles have been diminishing of late. Does this mean the extra oil the US is producing is finally finding its way to Asia in larger quantities than before?
Actually, that is not the case. We have an oversupply of light sweet crude. Unfortunately, all the refineries in the U.S. have been gearing for taking more and more heavy sour crude because it's cheaper. After spending tens of billions of dollars, all of a sudden, big surprise is that now the fastest growing segment of the oil types has been in the light sweet crude, which comes from the mid-continent in the U.S. And this is coming into the refineries in the East Coast, West Coast, and the Gulf Coast, but not sufficiently enough, if you will, to bring down the differential between Brent and WTI, which our benchmark crude, which created a very large profit margin for the refiners in the U.S.
Okay, thanks for joining me today. I'll be back later in the week with the press review. Don't forget to check out all our other interviews today by clicking back to the Dukascopy TV homepage. Until next time though, goodbye.